Today, let's talk about how to earn free Bitcoin and other cryptocurrencies, the risks, the rewards, and a lot more. What's going on, everybody? It's your boy, Crypto Bobby. I hope you are having a great day, great night, wherever you're watching or listening in from. And yep, like I said, today I want to talk about how you can earn free Bitcoin and the variety of methods in which you can do so, and also some other crypto assets as well. And part of what I think inspired this topic has been the stacking sats movement, or the stacking satoshis movement, and of just earning small bits of Bitcoin over time to eventually accumulate a large amount of Bitcoin. And there are different ways in which you can quote unquote stack sats. There are different methods in which you can do so. Some are basically risk free, some have some more risk, and we'll talk about which ones might be good for you, which ones might be worth your consideration, and a lot more in today's discussion. So we'll start off with something that I think is really one of the kind of the least risky ways that you can go about earning Bitcoin and other cryptocurrencies back, but primarily Bitcoin in the example of these two, and that is with Lolli and GetPay. So both Lolli and GetPay are cashback tools. So if you are to shop or if you are to buy anything on your credit card, we'll talk about Lolli first. But if with Lolli, it's a Chrome extension, and all you have to do is download the Chrome extension, and anytime you shop with one of their merchants, you get cash back. You're going to go and you're going to shop the way you normally do, as long as you have the browser, extension, the Chrome extension, you're good to shop at places like Walmart, Priceline, SeatGeek, whatever it might be. Sam's Club, a variety of different places to shop, and every time you do shop, you might get 1%, 2%, maybe even 5% cash back in Bitcoin. And the reason I say that this is risk-free is because you're not putting any money you're not taking money out of your own pocket and buying Bitcoin, number one. So that I think is pretty helpful. Number two, you're going about things in the way you would have anyway. Hopefully you're not shopping. I don't think this is the scenario where you should just go out and buy shit because you might get cash back. You might as well just buy Bitcoin. But if you're going to go and you're going to buy a flight, if you're going to take a vacation and you're going to do it through Priceline, you might as well get the extension and do that through Lolli. And I have a link below in the YouTube description. I have some other links there too. Some of them might be affiliate links. Some of them might not be. But if it is an affiliate link, it helps me out. If it doesn't help me out. Doesn't really matter. But I'll have a link to Lolli below that you can check out. But definitely worth trying out if you're interested. On the other end of the spectrum is Pay. And this is something you can download. They have an app in the iTunes store or in the App Store and for your iPhone as well as Android. And it's pretty simple, pretty awesome. They link up to your debit and credit cards, and you spend as you normally would. You don't have to do anything extra. But when you spend at certain merchants, you'll receive cash back in either Bitcoin or cash. So pretty similar to what you have with Lolli, but on the other end of the spectrum, you're just linking that to your debit or credit card, and you are transacting with merchants you typically would. Both case scenarios, you're not changing your behavior at all. You're not doing anything different at all. That's the key. And you're earning a small bit of Bitcoin here and there. But over time, maybe you spend a good amount of money, maybe you don't. Maybe you spend a good amount of money and maybe you earn a couple $100 in Bitcoin every year. That's more than you would have done otherwise. And I think a great way to just kind of stack sats and continue on your day by earning extra Bitcoin. And like I said, cash back is probably or not in this case cash, in this case Bitcoin, but Bitcoin back is probably the most riskless, risk-free way to earn any Bitcoin. There is another way that you can earn extra Bitcoin or other cryptocurrency, an extra way that you can earn Bitcoin, and that is with interest earning accounts. Now, BlockFi is one of the most popular ones out there, but we'll get into LoanScan as well. But it is important and it's key to note that with these interest earning accounts, they are not risk-free. There are potential issues that could happen, and that's twofold. So number one, if it's something like BlockFi, not all of these products have anything like FDIC insurance, where if there was an issue of a hack where BlockFi or any of these other companies perhaps stores their Bitcoin or their other cryptocurrency that you're earning interest on, you might not be covered by insurance. You might not be covered in that scenario. So that's step number one. If it's a quote unquote centralized tool like a BlockFi is, a kind of centralized company. On the other end of the spectrum, there are DeFi or decentralized products or projects, teams out there, a lot of which are built on Ethereum, things like Compound Finance or DYDX. And these are great as well, but they carry their own risks, not necessarily in the case of the cryptocurrency, that the kind of the holder of that cryptocurrency getting hacked, because in most case scenarios, that is actually you still. The issue with what you're seeing with some of these other DeFi products is that there is smart contract risk, meaning that if there is an issue with the actual code that is being run, these are decentralized products that are being built. And as a lot of people know, and as people talk about, quote, code is law, quote unquote, code is law. But if the code is bad, then that bad code is law and you lose your money. So that hasn't necessarily happened yet for any of these DeFi products, but it is still a risk that is worth considering, and why I advise somebody, not really advise, not a financial advisor, but why I would say that you should not put all of your money into any of these things at all, because they're not risk-free. But for the person that has a risk tolerance and also wants to earn some Bitcoin back, things like BlockFi and things like DeFi products such as DYDX or Compound Finance are fantastic. So if we hop over to LoanScan, what we can see here is that you can actually receive a variety of interest rates across a number of different products. So if you're to look at something like just putting USD or USDC, if you were to look at something like investing USDC, which is a stable coin, you can actually earn up to 7% interest APR, so annually, 7% interest annually with Compound Finance. You can earn up to 13% right now with something like Nuo, 8% with Nexo. But some of you guys, if you're owning cryptocurrency, you might not just want to hold that in a stable coin. You're probably looking at something like, let's say, Bitcoin or Ethereum maybe. And in the case of Bitcoin right now, you can earn 6% annually on your Bitcoin with BlockFi, or 3.75% with something like Celsius. So it really depends on what you're using. But I would definitely recommend looking at LoanScan. It's a pretty good filter for how much you can earn. And again, this is not going to be the BitConnect of 2019. And I think, unfortunately, for a lot of people that round in 2017, and hopefully you didn't get affected by this at all, but for people that experienced what happened with BitConnect, it kind of tainted the word interest in crypto. But that was 1% daily interest and not 6% a year. So it's a very different scenario. Definitely don't get the two confused. But if you are holding, let's say, just for example, $100,000 worth of Bitcoin a year, and rather than just keeping that all in your cold storage, maybe you want to earn some yield on that. Maybe you want to actually earn some Bitcoin on that investment that you already have. If you were to put that in something like BlockFi, that $100,000 in Bitcoin, let's say all else stays equal, will earn you about $6,000 worth of Bitcoin on an annual basis. That's not bad. That's a nice way to stack sats. But again, it does not come without risks. So again, I will have the link to BlockFi below. I'll have the link to LoanScan. LoanScan just aggregates everything, so you can check that out as well. Now, the last thing I think I want to touch on is staking. And this is something that is a whole topic in and of itself. I wouldn't necessarily consider mining a way to earn free Bitcoin or cryptocurrency, because mining, you have to put out an initial capital outlay. You have to buy mining equipment. That's not free, right? No, you're buying some type of equipment to earn a reward. Staking is a little bit different, because rather than it's almost similar to the interest earning accounts where you already own something, you're just putting it to work. So staking is somewhat interesting, because if you already own those assets, it is essentially free to earn those rewards. But one of the things that I think is really worth understanding, and as somebody who's gone through this myself in the past, with certain assets that have some have worked out okay, some have not. But it's important to look at staking yield, but also the real staking yield. I think people get excited when they look at certain places and certain aggregators, and they might see something like, oh, wow, something pays 25% a year in in staking. But what's the actual inflation? That is really important when you look at certain aspects of things. For example, right now, Decred, DCR is one of the most popular staking coins out there. So if you're a big fan of DCR, maybe you own some Decred, and you like the idea of staking Decred because you earn 9% a year. That sounds great, right? If you own $100,000 worth of Decred, you make $9,000 a year in DCR tokens. That's pretty awesome, right? Well, you have to look at the flip side, is that the network itself actually has inflation of 16% a year. So this is something where, yes, you can earn free crypto, quote unquote free crypto, but you also have to think about what the inflation is, or the real staking yield of these assets. It is something that I think is really important, and people get really excited about seeing annual interest rates, but they don't think about where they might be getting diluted. So you can stake crypto assets and you can earn an annual yield. You can earn a yield off them. You can technically earn free crypto, and a lot of people do, but I would recommend that you look at something like OnChainFX. I'll put a link to that below as well, but you look at something like OnChainFX because that will give you some insight into what the inflation is and what the real staking yield is, because there are certain assets that are not very good when it does come down to actually holding those currencies. Even if you are staking them, even if you are making 5, 10, 15% a year in new tokens, there are more tokens flooding the market, and the value of the token itself is going to go down. So something that you want to just consider as a whole. Now, I hope this video was just generally speaking helpful for you. I think that it comes up a lot as far as people always asking, like, how do you earn free Bitcoin? And I wanted to do something, somewhat comprehensive, but at the same time pretty simple, and also relatively, I don't want to say risk-free, because lending is not, lending interest earning accounts are not risk-free, but I think the risk reward is pretty good for the most part. So wanted to do something where it wasn't sketchy, dangerous behavior, but at the same time, there is still an opportunity for you to earn some extra Bitcoin if you'd like. Again, summarizing things, cash back in Bitcoin, things like Lolly and Pay, PEI, which both have links below. Things like Lolly and Pay both are really, I think, pretty much risk-free because you're just going about existing behavior. Interest earning accounts have more risk, either counterparty risk with centralized services like a BlockFi or Celsius, or on the other end of the spectrum, you have the DeFi risk of smart contract bugs, things like that, with Compound Finance or DYDX or other kind of products in that vein, or Nuo. So those are things that I think you want to consider. I would love to hear your thoughts, though. If you are watching on YouTube, make sure to sound off in the comments. How do you earn extra Bitcoin? Do you earn extra Bitcoin? Or you just give it away on a daily basis trading it? Or are there other methods in which you do so? Would love to hear your thoughts so I can always make a more comprehensive video in the future. If you're listening on the podcast, would love for you to sound off there on Twitter at @crypto_Bobby as well. Until then, folks, next time, I really do appreciate the time. Hope you have a good one. Peace.